everyone, good evening. You're watching The Money Show. However, we'll get straight to that in a bit because The Money Show as well has got that budget fever. And we decided to rebrand ourselves Budget Hotline. There you have it, a photo being taken of the top officials of the Finance Ministry. You have right there in the center of all the gents, Finance Minister Nirmala Sitharaman, flanked by other officials of the Finance Ministry. In fact, I think I did spot Subhash Garg as well right there on the top. And yes, this is of course just ahead of the all-important budget that we are waiting by for very, very closely. We just have, precisely speaking, 17 hours to go before FM Sitharaman will rise to present her maiden budget in the new Modi government tomorrow in the parliament. This is going to be a one-stop shop. Remember, FM Sitharaman, of course, has her task cut out for her, with consumption slowing, frequent economic indicators slowing, GDP number not looking all that great, credit growth slowing down, all of this. And of course, not to mention unemployment as well. So it's clearly a tough task at hand. And tomorrow we are going to be watching her present her maiden budget. And there you have it. That's, of course, the top officials of the Finance Ministry. Like I said, we just have a couple of hours more to go, 17 hours precisely speaking. So let's straight get away and talk about the budget chatter. Lots of expectations, lots of estimations as well by market experts throughout. For now, let's just set the context of when Nirmala Sitharaman is essentially presenting her budget. Let's take stock of the macros at this juncture. We have with us Poonam Sahni for a detailed wrap of just that. Hi, Poonam.
The first thing, of course, from the budget would be the entire fiscal consolidation path, and would the government, in fact, stick to 3.4% target, or would there be a minor slippage? Look at the consolidated fiscal deficit. We are, of course, seeing a high consolidated fiscal deficit so far, and even the state deficits have been rising, so the need to constrain on that. Having said that, if you look at the overall revenue projections, so far during the interim budget as well, the tax revenue, of course, has dipped sharply, especially the GST revenue right there. We are seeing fairly lower than expected GST collections, and there is very limited room in order to propel the overall direct taxes. And if you look at the entire chart, the direct taxes projection even for FY20 seem to be far higher. So there is very limited room in terms of those revenue projections, and the more realistic they are, that would mean a more credible budget. GST growth rate has been assumed slightly higher in FY20 as well, so watch out for that figure as well in the budget tomorrow. In fact, if you look at the overall spending cuts, we have seen FY19 good amount of spending cuts versus the budgeted across the board, and this would be an important point to be watched out for. Will the FM go ahead and cut down on the revenue expenditure, or would we constrain the capex spending? That would be fairly important. And besides that, what are the really sources that probably government can rely on? It could be higher non-tax revenue stream, be it telecom spectrum, RBI dividend, RBI excess reserves. We already know there is a limited possibility to get that right now in terms of the government kitty. And also, of course, good amount of some of the economists, for instance, Kotak does estimate that probably government could garner a huge amount of money via PSU divestments as well as PSU stake sales, and that money is projected at 12 lakh crore according to Kotak estimates, and 77,000 odd crore just from the stake sale that the government has in Axis, ITC, L&T, etc. Having said that, of course, the divestment target has been so far kept realistic. Will the government meet or not? That would be an important part. The fiscal spending has also been taken in terms of a huge amount of fiscal deficit funding has been reliant on national savings, and hence this also poses monetary transmission challenge. This would be an important factor. Huge amount of reliance has also been in terms of off-budget financing. There is a possibility that the government may again continue with some amount of off-budget financing, and hence there is a possibility that the FY20 estimates can be anywhere between 3.4 to 3.6. There could be some reliance on both a combination of fiscal slippage as well as off-balance sheet financing. So watch out for that.
Okay, Poonam, thanks a lot for that. Well, that's, of course, a budget for 1 billion people. Now, let's talk about a budget for people like you and me. That is the common taxpayer. What has the Modi government, along with Finance Ministers Arun Jaitley and temporarily Piyush Goyal, offered to the taxpayer? Well, let's start off first with 2014. What exactly has FM Jaitley done? What has happened over there? Well, first up, relief on the exemption limit front from 2 lakh rupees raised to 2.5 lakh rupees. The deduction under Section 80C as well was raised to 1.5 lakh rupees. So that's straight away a 50,000 rupee bonanza coming in over there. Not just that, even the deduction on an interest rate on home loan for all the guys who were taking a home loan had been raised to 2 lakh rupees for 1.5 lakh rupees. So, hey, if you're a home loan owner, that's straight away a 1.5 lakh rupee exemption that has been given to you by FM Jaitley in the very first budget of 2014 of the Modi government. In 2015, then, the focus, I think, shifted more towards, allowances and exemptions. So first up, the health insurance deduction was raised by 10,000 rupees for senior citizens as well as for non-senior citizens. The transport allowance exemption was doubled to 1,600 rupees. You had an additional deduction as well granted of 50,000 rupees for NPS. This is under Section 80C, where only 1.5 lakh was allowed. But now you would claim 2 lakh rupees if you invested that balance 50,000 in the National Pension Scheme. But there was a surcharge as well on taxable income of more than 1 crore rupees, which was earlier at 10%. It was hiked by 2% to 12%. Budget 2016 as well brought about its fair share of happy times for, the tax holders, not so much so once again for the super rich. So yes, we had the 87A rebate that was increased to 5,000 rupees. It's almost like a discount basically offered to the taxpayer. There's the deduction on rent paid hiked all the way from 24,000 to 60,000 rupees. This was a very big one. The NPS withdrawal as well became exempt to the extent of 40%. Remember, it's exempt when you make the payment, it's exempt when you earn the interest, but withdrawal time, you do have to pay tax. Home loans, by the way, of up to 35 lakh rupees were given an additional benefit of 50,000. This was essentially to push forward the whole affordable housing bit that was, PM Modi's pet project. However, once again, taxable income of more than 1 crore, and now the surcharge has been hiked to 15%. Like I said, not so much in terms of goodies for the super rich. Budget 2017. And again, a bonanza for everybody. The 2.5 to 5 lakh slab tax rate was cut from 10% to 5%. So that's 12,500 rupees saving coming in for everybody earning more than 5 lakh rupees. There was that rebate as well allowed of 2,500 rupees if your salary income is between 2.5 to 3.5 lakh rupees. So that's again a push for, the middle income or the lower middle income class. Then the 10% surcharge for individuals with income between 50 lakh and 1 crore rupees. And then there was a maximum penalty of 10,000 rupees for delay in filing their income tax return. Budget 2018 and standard deduction is back for salaried people. It's flat 40,000 rupees, and that replaces medical and conveyance reimbursement. Cess, by the way, was hiked by about 1% to 4%. And then the dreaded long-term capital gain tax made its entry into everyone's portfolios. If you earn an LTCG of more than 1 lakh rupees, 10% will have to be paid to the government. And in interim budget 2019, finally, a full rebate on tax for income up to 5 lakh rupees. If your income is 5 lakh rupees, or for that matter, even 7 lakh rupees, and you've taken that 2 lakh rupee deduction, you get a full rebate. You do not have to pay any taxes. The no-notional rent on second property, that too is very, very important. Do remember, if you're the owner of 2 house properties, one is where you live. The second one, even if it's not on rent, the government considered it to be a deemed to be let out property, which means you will have to calculate notional rent and pay tax on that as well to the government. So that's essentially a synopsis of what FM Jaitley has given you in the last 5 years. Now let's talk about what FM Nirmala Sitharaman will give us in tomorrow's budget. But let's talk about the common man's wish list before that. And guys, this is the budget hotline. So our phone lines are open 24990388. Over the course of the next 20 odd minutes, we will have with us Ved Jain, the past president of the Institute of Chartered Accountants of India. So folks, golden chance to get it answered by none other than CA Ved Jain. All your questions and queries about taxation, what you can expect from the budget as well tomorrow. Mr. Jain, thank you so much for joining in. And I think I must start off first with your own wish list. If you had the chance to meet FM Sitaraman, and of course, as a taxpayer, hey, the first thing that comes to my mind is, why don't you cut down my tax bill, right? But purely from an unbiased and objective perspective, what is it that is on your wish list?
My wish list is what is country's taxpayers pay list, wish list. You see, the finance minister, while presenting the interim budget, the then finance minister, Mr. Piyush Goyal, has exempted income up to rupees 5 lakhs with no tax benefit to taxpayers having income above rupees 5 lakhs. So my first wish list is to give concession to those who are falling in the tax bracket between 5 to 10 lakh rupees. The tax rate is 5% up to 2 lakh to 50,000 to 5 lakh rupees. And thereafter, straight away, it goes to 20%. So my first list is that from 5 to 8 lakh, the tax rate should be 10%, and from 8 to 15 lakh, the tax rate should be 20%, and beyond 15 lakh, the tax rate should be 30%. So that's my first list for the personal taxation. Another is ATC, which was increased long time 2014 from 1 lakh to 1 lakh 50,000. Looking to the inflation, the same should be increased to rupees 2 lakh. Third, housing for all, that's a dream project of the Honorable Prime Minister. And considering that the concession which is given for the interest on the housing loan, which was increased from 1 lakh 50,000 to 2 lakh rupees, should at least be increased to rupees 3 lakh. These are the three important changes which are required on personal taxation. And another wish list is on the corporate, which I want the corporate rate, with the Honorable Finance Minister then has promised in 2014 to bring it down to 25%. It should be brought it down to 25% across the board, and that's the one which the economy need. And second wish list is that for corporates which want to set up manufacturing activity in India, maybe MNC or others, in order to increase employment, in order to increase Make in India dream successful, that should be a concessional rate of a 15%, so that India can compete with the other economies around the India, like Singapore, Hong Kong, China, all those. So that's a wish list I have on that issue.
All right. Well, if you'll ask my wish list, I like the first one already, and that is increasing the exemption limit. Let's see what FM Sitaraman has in store for all of us tomorrow. For now, Mr. Jain, we've received a couple of questions and queries on email prior to that. And yes, like I said, folks, we'll just keep our phone lines open for a very short time. So quickly call in and Mr. Jain will answer your questions. Our very first query is coming in from Mr. C.J. Shah. He says, okay, it's a question that's, I think, on everybody's mind, and that is wealth tax expected to come back in the budget? In that case, how should I make any changes to my overall assets portfolio? I own a home, gold, and some equity shares and mutual fund investments. It's a very talked about topic. Estate duty, wealth tax coming back, inheritance tax, many names. But yeah, the sum and summary of it is that you'll have to pay a part of the quantum of the value of the assets you're transferring to your heir or to anybody else, to the government. So yes, Mr. Jain, how would you reply to Mr. C.J. Shah?
See, let me answer this. First, I believe that this is not likely to happen because India is a developing economy, and the way Indian economy has grown in the last 30 years post abolition of the state duty in 85 is an example that how capitalization has helped the economy. India need more and more capital, and capital formation is an important aspect. So I don't see that any tax in the form of inheritance tax or a state duty can come back. Wealth tax was abolished way back last 4 years back only. So that's I also don't see any reason that wealth tax should be brought in. And I may just clarify that inheritance tax and wealth tax are not revenue generating exercises. These taxes were introduced as a socialistic pattern which India has followed post its independence. Thereafter, there was a realization that it is hampering the growth of the economy. It is hampering capital formation, which a developing nation needs. So I don't think that inheritance tax or a state duty can come up. Now, answering the second question, hypothetically, in case it is introduced, then you cannot take any preemptive measures to avoid the taxes. The tax administration and the legislature will take care of all possible avenue in case it intends to tax that a state or inheritance will bring inheritance tax wherever there is a possibility of evasion. So whatever you want to do, that will not be allowed in case the legislation comes, because it will be a comprehensive legislation unless the legislation itself states that it want to impose tax on non-productive assets. But the challenge in the non-productive assets is from where the money will come to pay those taxes. So my first answer there, as I said, is I don't anticipate that this type of tax can be introduced, that too at this stage of the Indian economy.
Hope that there is no such introduction of the wealth tax, which was brought about, just a little while after independence. It's been subsequently eliminated from our income tax laws. Okay, next up, Kavya Sharma has said, I am 59 years old and have subscribed to the NPS or National Pension Scheme. In the upcoming budget, we could see more income tax relief on NPS withdrawal. Can you tell me what this would mean for my investment in NPS? Mr. Jain, like I was flagging off earlier, I think up to 60% of the withdrawal, 40 or 60% of the withdrawal at the time of retirement is exempt. But that means you still have to pay tax on the balance. But yeah, if we're looking at 100% relief on NPS withdrawal, what would it mean for, folks like Kavya?
See, the question of NPS should be looked into from the purpose for which it has been introduced. NPS is a national pension scheme which intends to provide you continuity of the pension. So the basic thrust is that post-retirement, you should be able to meet your expenditure by the withdrawal with the pension which you are getting it. So that's why the objective is that a partial withdrawal is allowed, not that entire money withdrawal is allowed. So I don't anticipate that any change is likely to happen in this budget. The status quo of 60% withdrawal being exempt and the balance being taxable, that will continue. I do not foresee for that purpose, because the whole objective is to provide your retirement benefit. And in case you are allowed to withdraw entire money in the tax-free, the whole purpose get defeated. That everybody will withdraw the entire money, and from where the retirement benefit will come as a pension every month thereafter.
That, of course, is the word coming in then on National Pension Scheme. Okay, Sanjay, 36-year-old Sanjay has sent in a question. He says, I'm currently working for an MNC and under Section 80C, which will be the most efficient investment tax saving avenue to use. All right, 36, so he's fairly young and he's working for an MNC, which means he's salaried. Mr. Jain, what would you recommend he use?
See, 80C is a bouquet which is available where you can pick and choose whatever suits you according to your circumstances. Normal way is when you are young, then you want a long-term saving because you have because the issue is that if in case you want a more tax efficiency, I believe the public provident fund is the best, where you get deduction of the investment you make, you get deduction of the interest which you are earning, and when you get back that money, that is also exempt. So the best possible model is the 80C. But in addition thereto, there are other avenues. In case you are intending to buy a house, then that can also be a good idea, because the installment which you pay after getting the house, that's also exempt. Interest which you pay on housing loan, that can also be included in case you are not willing to take that benefit of Section 24B also. So in case you want a complete tax efficiency looking to your age, my suggestion will be public provident fund will be the best objective where you can do it.
All right, PPF, that is one of the most favored as well investments that usually salaried employees and individuals tend to make under Section 80C. A very popular and a very easy method as well. All right, we have the next question from Omkar. He says, I'm 33 years old, currently making investments under Section 80C. Should I also take advantage of subscribing via NPS because it provides me another 50,000 rupee buffer? Unfortunately, he's not mentioned what his income amount or anything like that is, because if his income amount is as much as is being covered, or rather after exemption of 80C, or rather after deduction of 80C, he's coming under taxable limits, we would have been able to make a more prudent call, take a more prudent call. But anyway, let's assume that it's not being covered. Mr. Jain, what would you recommend? Should he go ahead with NPS, or do you think that instrument still falls short in many ways?
Obviously, this 50,000 is an additional exemption which is available beyond 1,50,000 rupees. In case he has an income chargeable to tax and he want to plan it out, then he need to contribute 50,000 rupees. And if his income falls in the tax bracket of 30%, it will be a net saving of 15,000 rupees on tax. And if it falls in a tax bracket of 20%, then it will be a net saving of 10,000 rupees. So there can't be second opinion on this issue, but this is an additional exemption which is available under NPS beyond 1,50,000 under section 80C. So he need to go for this exemption in case he has sufficient cash flow or fund flow available to make such investment.
At nod from Mr. Jain, go ahead, subscribe for the National Pension Scheme. It's an additional 50,000 rupee bounty for you. Remember, it used to be only 1.5 lakh rupees that you're allowed to claim as a deduction under 8IC. But now, especially for folks who have income of more than 6.5 lakh rupees or, almost 7 lakh rupees, this 50,000 rupees is certainly a welcome introduction. Okay, we have Alka who has sent in her query. She says, I'm 35 years old and I am eligible for affordable housing. In the current tax scenario and the current tax setup, would it make more sense for me to buy or rent a property? Well, this question will need a lot more, information like which city, what is the rental price, what is the property value, so on and so forth. But yeah, I'm hoping, Mr. Jain, that you would still be able to help Alka out.
I can give a simple answer. You have rightly pointed out you need more facts to reach to the exact number. But in any case, buying a house is always beneficial because what you are contributing, you are basically contributing by investment in the house. And at the same time, you are getting benefit on account of various exemptions available under the Act. One is 80C when you contribute, and also the interest which you get later on the housing loan you pay under section 24B, etc. So, but when you pay rent, then the deduction is only on account of what we call the rent paid, which is 1013A. So that goes as part of the expenditure. So in case you are paying, say, rent of 10,000 rupees and you save 30% tax, you are saving 3,000 rupees. Still 7,000 rupees is going out of your pocket as an expenditure, which may not be taxed, but definitely it is moving out. As against this, when you contribute 10,000 rupees as your installment for the housing, so you may not be saving 3,000 rupee tax, you may be saving 1,000 or 2,000 rupees, looking to the exact number, or maybe 3,000 rupees. But 7,000 rupees balance or 8,000 rupees balance is not expenditure, but it is a investment which is going into the house to reduce your loan. So that's why it is more beneficial always to, I will see, subject to certain condition, to pay for installment, buy a house, rather than to pay rent for that purpose.
Okay, that is the word then coming in from Mr. Jain. Venkat from Chennai is joining us now on the phone line. Hi Venkat, thanks for calling in. What's your question for Mr. Jain?
Query regarding capital gains tax.
Okay, and what exactly would you like to know about the capital?
My query is this, is the capital gains tax payable immediately on the happening of the transaction, or I can pay it at the time of filing the returns?
Okay, good point. Mr. Jain?
No, capital gain tax is payable as an advance tax depending upon the time when the capital gain has accrued. In case it has accrued before 15 June, then you need to pay the capital gain tax in the 4 installments which are on 15 June, 15 September, 15 December and 15 March. But in case it happens after 15 June, then you need to cover up the areas in the next installment. If it happened after 15 September, then you need to cover up in the areas in the next quarter, that is December. But if it happened after December, then you have to cover up in 15th March. And it happened after 15th March, then you need to pay it before 31st March. Then there is no interest liability for non-payment of tax. Capital gain tax is liable for payment of advance tax, provided that capital gain accrues by the time when your installment becomes due. But in any case, if this happens after the installment has become due, you need to pay before 31st March. And this liability to pay advance tax arises only when your total tax liability increases rupees 10,000. In case the liability is not more than rupees 10,000, then you are not liable to pay advance tax. I believe capital gain tax is normally when you have a substantial income, it should be more than 10,000 rupees. So the normal answer will be yes, capital gain tax is liable for payment of advance tax. And you need to pay within the year in which the capital gain has accrued to you, not with the filing of the return.
All right, there you have it. That I hope with that, Venkat, your query has been answered. Okay, I think we have just received an email query. Devendra Thawani from Ujjain has sent in a question. He says, I want to know if the TDS on interest income above 10,000 rupees. Okay, so I think what he is, the sum and substance of his question is that if your interest income was 10,000 rupees, earlier you had to deduct tax. Now, the limit has been increased to 50,000 rupees. Mr. Jain, I think he just wants to confirm that. I think in the previous budget, the FM had, okay, Devendra has actually called right now on the phone line. Devendra ji, could you explain your question to Mr. Jain? Do we have him on the phone line? Devendra, if you can hear me, can you explain what your question is with respect to TDS on interest income to Mr. Jain? Okay, there seems to be a bit of an issue with the phone line. But yeah, Mr. Jain, he basically wants to understand what is the limit that, the budget can essentially, the interest income is on which TDS can be deducted.
See, let me clarify that the increase in the exemption from 10,000 to 50,000 rupees was only for the senior citizen, not for all. A new section was inserted for 80 TTA and not for all. So, and that too interest received from bank, post office and not from anybody else. So, this exemption is available to only a senior citizen, and as such section 194A TDS need to be deducted on all payment of interest exceeding rupees 10,000. There is no change in that law. However, in the case of a senior citizen, because the exemption is up to 50,000 rupees under TTA, and in case a senior citizen is there, then he need to file form 15G or 15H with a bank so as to avoid payment of taxes, deduction of tax on that income of rupees 50,000. So otherwise it is not the case of exemption. See, exemption and deductions are two different issues. Income is exempt, but you have to see what is your overall income. So you can file this exemption 15G and 15H only when your income is not chargeable to tax.
Okay, it's only valid for senior citizens. I hope all our viewers have taken note of that. Okay, phone lines are still ringing. Let's take the next question from Hasmukh Desai. He is calling in now. Yes, Mr. Desai, thank you for calling in. What's your question for Mr. Jain? Mr. Desai, can you hear me? Okay, you can blame it on the telephone connections or, the fact that perhaps we need more towers in Mumbai. But unfortunately, we are not being able to connect with Mr. Desai. Maybe he can try emailing us. Okay, well, with that, we will unfortunately have to wrap it up on this edition of Budget Hotline, folks. Monday as well, and tomorrow, of course, as well, we are going to be having a very special session on taxation post the budget. I'm sure you guys will have lots of questions on the budget post that. Join us then. Mr. Jain, thank you for joining in on ET Now and very patiently answering all those questions and, of course, sharing your wish list as well. All eyes will be on FM Sitaraman. So until then, we will wrap up Budget Hotline. Stay tuned. We are going to be kickstarting the Money Show with our personal finance corner.